the rise of the SME IPO. And while there are some concerns linked to the kind of frenzy that we've seen on that side, but you asked the question, is this the new growth round? Is it?
Well, it was rhetorically, and I would say that for a large number of startups which have access to funding, I don't think this is the growth round. But I would say that there are a certain number of startups which do find it hard to kind of access the kind of capital that, say, Lenskart would be able to raise. So in that context, when you're finding it very hard to raise a large round, or you're not loved as much, this becomes a very powerful way. And if you look at it, Shereen, the amount of money raised last year in the SME IPO was 10% of the main bourse. So it's rising. And if in the last 5 years, if you actually look at it, the SME IPOs, yes, clearly it's been a buoyant last 5 years, and they've benefited from the liquidity that's awash. But they've really been able to deliver much better than the main bourse IPO. So in all likelihood, we find that the receptivity to a company, that's typically if it's a startup or even if it's a slightly old school play, we are likely to see far better receptivity. And there's a deepening of the SME IPO, barring, of course, anything untoward that's happening. And if the liquidity was to continue, we would see this growing. It's not for everyone, but for a certain kind of, I would say, startup, this would be a very, very attractive way to kind of list and get liquidity for itself. Yeah.
Well, speaking of receptivity and listing, Karthik, let's extend that to the main board now. And, we do have a pipeline of celebrated names looking at IPOing through 2024. But given where the markets find themselves, as well as where the large Indian startups find themselves and the sort of surround sound at this point in time, how do you see that impacting confidence and receptivity?
I think if I were the regulator, and it seems quite clear from some recent actions, I think they're a little wary after that first mini boom that happened in 21, followed by a little bit of a suppression of that market. In fact, that would be an understatement, right? A lot of them got plundered by the market for brief moments of time until they actually had to prove their worth in the public eye, in public domain. So Zomato's comeback story is fantastic. The Policy Bazaar turning profitable. Nykaa is almost back. So the stories, I think, are giving confidence, but I think the regulators vary about what they let out in the large caps per se. These are all large caps, right? Anybody is a unicorn, and little more than a unicorn in India becomes, late mid-cap, large cap. And so there, I think there's going to be more scrutiny, I would argue, and you can see some big pullback as well. But if everything is clean and you have a shot at being profitable and it's not a messy cap table or balance sheet, I think there's no better time in some sense. So recently I found myself quizzing the two big edtech ones, Upgrad and Eruditus. One of them is thinking of moving back to India. And they still feel 2-3 years away from their public issuance at the least, right? I was telling them, please hurry, because then everybody can peg their valuations to you guys, because you're the leaders in the market. And we need to see that for a chain reaction to begin. And I feel that's, the analysts in the public market need to understand these business models, not one by one, but en masse. So I feel that's the main boss piece. And on the SMB piece, I feel, just to add to what Sajith said, the one risk is that in India, the SME market is also sensitive to a borderline profitability or a path to profitability. So it's not for most venture funds, venture-backed companies which have not figured out how to turn profitable. Ironically, as a main boss company, you can actually go public if your business model is well understood, you're a market leader, and you're actually on a path to profitability. Today, the analyst universe understands that you're the best in class and they will actually back you in the markets. That is much tougher in the SMB market. So the SMB market is more, relevant for someone whose profitability / size is considered a little less attractive to the venture market, but yet can actually go and continue being profitable for 5 years or 10 years after they go public. A lot of demand, in my view. Just a matter of time, not if, but when all of these will list and create a very vibrant tech sector index in public markets.
we continue to be under-indexed on R&D spends, on innovation. As you look at the playbook building out, and you said that, it is going to be distinct for India, I mean, how much of this is going to be driven by innovation? How much of this is going to be driven by R&D and the moats that one can build on account of that? What do you see on that front at this point in time? Because we really haven't seen much change, even as far as the large companies are concerned, when we talk about spending on R&D.
Yeah, that was an interesting finding when we looked at the data and found that Indian private companies underinvest in R&D, and a lot of the lower numbers actually come from the private sector underinvesting, which we've seen that in the gross fixed capital formation side as well. And it's actually fascinating how that parallel kind of plays itself out. There's only so much that the government can do to kind of drive that. And in our view, you won't get the next wave of highly innovative companies if you don't invest in basic research. Given the challenges around Indian academia, the research that's coming out of it, we feel that aren't enough institutions and Indian startups and Indian corporates will have to kind of invest. And until that happens, we're going to see very limited sectors in which space is one we are really seeing a fair amount of activity. And no doubt about that, a lot to do with how ISRO has supported the growth of the sector. But barring that, we haven't seen too many other sectors. Perhaps we'll see this in the coming few years. We haven't seen that. So to your point, yes, I would say that the intellectual property is an area where I think we could do far more. And I don't think we have seen that yet. And it's primarily led by private sector underinvesting to a significant degree. Yeah.
Karthik, the two trends that we've, of course, seen gather momentum and steam, the rise of digital native brands, and the share is up at 44% in 2022 versus 25% in 2018. And the rise of quick commerce emerging as a key channel for digital native brands and moving beyond the sort of necessities which was the playbook when they started with. How do you see the possibilities emerge, the opportunities emerge for both these spaces over the next few years?
I think we've been believers and observers of this, which Sajith's articulated well, but we've also been believers. We're also backing companies. I don't know where Dunzo will end up, but we were first backers of the space. But essentially, if you look at the real long game in India, you have to buy into sort of emerging consumer behavior as opposed to existing consumer behavior, right? So what I mean by that is, if you look at the urban population today that has been brought up digitally native, their inclination is to be able to do all of their discovery, sharing, purchasing, everything is mobile first, right? Or online first. And I think that trend line is kicked in 4, 5, 6 years after access costs, after brand availability and penetration and consumer behavior sort of come together. So we always believe that these things to come together take 5, 6 years. You can't switch on a button and say, I'll spend a lot in 2017 and everything should have fallen in place. There's a time and a place for it, and I think it's beginning to happen. And the pandemic definitely helped in driving some of those accelerations of behaviors. I would argue if the pandemic hadn't happened, we would be still 2 years behind or 3 years behind. So I think some of these have been driven by just incredible ease of access and a predominantly online purchase behavior, accelerated by sort of the last 3-4 years of both external circumstances and how India's youth is essentially driving a lot of this. So the spending power with that particular segment of customers drives both those trends, quick commerce and digitally native brands, if you ask me. It's not necessarily you and me necessarily shifting all our purchasing to that format. Because we've experienced a certain type of commerce and we're very familiar with our spending power in a different model of commerce. And I think the surging youth consumption is basically driving this, in my humble opinion.
What could trigger the return of venture?
Yeah, I feel some of the tide is turning. Looked at the Feb numbers, and they're at 900 million. And even so, if you look at that kind of a run rate, we should start seeing it cross what 11, 12 billion. In my mind, I think a lot of it has been do with growth. And if you actually look at the slide after this, which you're presenting, growth's really, and if you tease it apart into early stage and growth, you would find that growth's really been the big sharp fall, and a lot of it is led by really growth. And growth's been sitting on the sidelines, primarily due to the fact that the stock market gave a lot of these stocks a beating. Fact that many of the multiple benchmarks that comparison in the public market's been very low. So they're saying that, hey, if that is so low, then how can we give a high valuation here, which is fair. But as the market kind of lifts itself up, and as growth starts seeing more compelling stories, they will start wading in. And I feel the Indian market should certainly go up from where it was last year. And a lot of it will be led by growth happening. And when I say growth, it's both early growth as well as late growth. And while it won't be as buoyant as 2021, that was an extraordinary period. We will see some of the energy coming back, though it won't be as much animal spirits. So I would say, Shereen, I would certainly see it, going back into say 12 to 14 billion dollars. That's my view. Will it be as high as what it was? No, maybe not. But fundamentally, it's led by the fact that growth investors have been very, very cautious, and they now want to invest only in really good ones.
Karthik Reddy, Sajith Pai, thanks very much. We will take a break. There's a lot more coming up. Don't go anywhere. We're back in a moment with more.